You're up. Am I supposed to see you here?
Hey everyone, thanks for joining today. Today we are going to talk about cash out refinances and bank refinancing. So many of you may have some credit issues. We'll touch on that, or you may have properties free and clear. We can touch on that a little bit. And then also maybe you're a wholesaler and you want to provide full service wholesaling to your customers and have them refinance so that they can do more wholesale, buy more properties from you. So it's important to know how to find the banks, what questions to ask them to get all of your connections lined up. So we will we'll get started.
I'm telling them on the side here answering questions.
David is here on the side, so if you have any questions, feel free to type it and he can let me know, and we'll just jump in and get started. So first question that we get a lot is, how do you even find a bank to work with? Oh, I talked to Wells Fargo or Bank of America, and they don't want to work with me. They say I can only have 4 or 10 mortgages, or my credit's not good enough. So we have found that you really want to find those smaller banks, what we call portfolio lenders. So those are the banks where they make their own decision. They're not regulated by the government, so they're not taking loans from the government, so they don't have the restrictions, things like 3 years for a short sale before you can get a mortgage, or 7 years for bankruptcy. They make their own decisions, and a lot of times they'll look at the properties instead of just your credit score. So the way that you would find the banks, there's a few different ways that you can do it. You can certainly put in into Google, just type your city and type community bank, and you should get a whole list of them. Or I would say, even if you're just driving around town, look at where they're doing some construction. See, and a lot of times the banks will put up signs in front of the new building that's going on, and it'll say financed by C1 or Regions Bank. Those are the banks that are going to be working with investors. So, definitely make sure that they're on your list. I have found personally that if the banks have less than 7 branches, they're usually better to work with. Even 1 or 2 is good to work with, but once they get too big, then they become a little bit more restrictive, and you may have to have better credit or better scores. And you or some of your clients may not have that 750 credit score that they're looking for. So when you go into Google and you type it in, you're going to get a long list of community banks. I would say try to create a spreadsheet for yourself to keep track of everything. Try to get a list of about 25 banks to start with. Just put their name and their phone number, and then if there's a contact information. You're going to want to talk to somebody when you call the main number. You're going to want to talk to somebody who's in the mortgage department, and then they're going to ask you if it's a commercial loan or residential loan, and you're going to tell them that it's a commercial loan on a residential property. Residential loans typically refer to if you're owner occupied, and since you're calling for investment, they consider that commercial. So after you talk to the commercial loan officer, you're going to want to ask them a few questions. Many of you may know, David and I had a short sale. It's been about 3 years now. But in the beginning, when we were first really getting into this, our credit was not good. So I found it best to really be open with them up front and tell them what our situation was before we got too far, to see if they were willing to work with us or not. So we would tell them, we're a real estate investor. We want to buy property in the local area, trying to find a bank to work with. And then I would tell them, that we had some credit problems, and see if they were still interested, because I didn't want them hitting my credit, pulling my credit every time and lowering my score even more. So if we got past that, then I would ask them these questions. And again, I just created a spreadsheet so that I could record all of the answers to these questions, and then I could have a comparison of the banks. and then go back and see which ones I wanted to work with once we did get the property ready and under contract. So some of you may be doing out-of-state investing, or you may be doing wholesale deals, full-service wholesale deals out of state. So you may want to ask them if they'll work with investors that live outside of their lending area, as long as the property is local to them. And you'll find we do some investing in Alabama. We live in Florida, and that negated a lot of the banks for us. They only wanted to deal with local people for local properties. But that's okay. If they don't want to work with us, we'll just keep going down the list and we'll find somebody whose business model matches ours. Then I would ask which cities they currently lend to. So we're in the Tampa Bay market. So some of the banks, so that encompasses 5 counties. Some banks may only lend to 1 or 2 of the counties. Some go a little bit further. So we just wanted to know what their area is before, we got too far with them. So make a note of that for them. Then one of the key questions is if they have any portfolio or in-house loan products. So that's a key question, because particularly if you already have some mortgages, they won't have a limit if they're a portfolio lender. Likewise, if you have credit issues, or if your investors might have credit issues or multiple mortgages. So you're looking for those portfolio lenders. And then you'll just want to ask them to tell you about those products. So what are the terms? What are the lengths of the loans, interest rates? Typically, we look for 20-year AM. 30 would be great. They're a little harder to find. So 20-year AM. 5-year balloon is pretty typical, but sometimes you can find banks that will do, it's basically a flat rate for 5 years, and then it readjusts to a percentage over prime every 5 years. That'll save you some money if you can find that, because you don't have to go through the whole closing process again every 5 years. So, but again, just find out what their products are, keep them in your spreadsheet. So then when you have a few banks that are going to meet your criteria, you can kind of compare them. And even if their rates are a little higher, you can try to negotiate that. If you say, well, your bank down the street is a little bit cheaper in terms of their interest rate, they may lower their rate and meet you. Another important thing is to ask if they have any seasoning requirements. So what seasoning means is sometimes banks will want you to hold the property for a given amount of time. Sometimes it's 6 months, sometimes it's a year. Excuse me. You're really looking for those banks that don't have any seasoning requirements, because you want to be able to buy it, fix it up, run it out, and refi it right away. The sooner you can do that, get your money back into action, you can buy your next property. So, so definitely ask about the seasoning requirements. Then you're going to want to see what their loan to value on the refinance loans is. Typical is somewhere between 70 and 80%. Occasionally you'll find a bank that does 85, although candidly the banks that I found that do 85, their appraisals tend to come in significantly lower than some of the other banks. So it tends to balance out, but typically 70 to 80% is where you're going to find that and what you're looking for. Another key question is, are your refinance loans based on your purchase price or on the appraisal price? You're definitely going to want it to be on the appraisal price. Otherwise, because basically if a home has an appraised after repair value of $100,000, you're probably going to be buying it at 60, putting a little work into it, and then refining it out. So you certainly don't want the loan on that $60,000 purchase price. You want it on the appraised price. So pay attention to that. And then, sometimes if you want to just ask the question in a different way, you can just say, if I paid cash for a house last month, fixed it up, rented it out, can I refinance it with you immediately. So that just brings back into those seasoning type of questions, and it's good to just confirm that they're open to do those cash out refinances. As you get your rapport going with your banker, you're going to want to, and you can do this on the initial phone call too, but sometimes they get a little standoffish when you ask them, but certainly it's good over time to know what the maximum lending limit for any one investor is. So in some cases, it may be tiered. So the commercial loan officer that you're talking to, he may be able to approve up to 100,000 or 500,000. It's good to know that, because then if it needs to go to the board after that, or to the president after that, and then to the board, that adds time to how long the refi is going to take. So you just want to know where you stand, and and say, for example, if the board meets every third Thursday, you're going to want to get all your information to them prior to that third Thursday, because if you send it in on the third Friday, then you automatically have to wait a month just to get the approval before the underwriter will even start. So just keep that in mind. You may want to ask it on the first go around, but it's definitely something that you'll want to find out as you start working with your banks. Another thing you may want to know is if their in-house loans get reported to credit unions. So, this could be important if you are trying to repair your credit score, or for your investors if they have a lot of different mortgages. Some people don't want all of their mortgages listed on their credit report. So some do, some don't. It's kind of up to you how important that is. And then we just usually like to ask them how fast they can turn it around, because we want them to know that we're serious and that we are looking for them to turn it pretty quickly, because the sooner we can get our refis done, then we get that money back and we can go on and purchase the next property. So the other thing that I would recommend when you're talking to banks is if they do the cash out refi, sometimes they'll ask you to open a deposit account with them, or, establish the relationship. And that's all fine and cool. But I would also ask them if they do unsecured line of credit. We actually initially found this almost by accident the first time, but now we ask every bank that we start to work with if they'll do the unsecured line of credit. And what this does is it just gives you extra money where you can, even if it's only 50 or 100 grand, you can still buy another property with that, or do an extra rehab and get yourself going that much quicker. When you finally get to the point where you're ready, you'll want to ask them to, do they need the renter? Do they need the lease? When you're getting ready to send all of your paperwork to them and say, hey, this is the address, you want to know, do they need the lease in hand before they can even start the paperwork, or could they start the paperwork without the renter in place, get it going through underwriting, and then not close until it's fully rented? That could save you a week or two of time if you're trying to turn the rehab that much quicker. So ask them for that unsecured line of credit if they have any programs like that, and then ask them about the renter. But even before you send your property to them, do your homework a little bit beforehand and make sure that the DTI works out. And so DTI is the debt to income ratio. So you're looking for a 1.25 or better. So that means if you have a property that rents out for $1,200, you're going to want to put in the terms for the mortgage, figure out what that mortgage payment would be, subtract that, subtract your insurance, your taxes, property management costs, any HOA fees, anything like that, and then see what the debt to income ratio is. And again, you're targeting 1.25 or higher. That's what the bank is looking for. Whether they tell you that or not, that's what they're looking for. Sometimes, and I'll give you a story that just happened about a month ago for us. An appraisal came back, and this was in a new trendy up and coming neighborhood in our area. The appraisal came back, and it came back, what did it come back at, like 100. We had done all the comps. We knew that that was much too low for that area. We still would have gotten the majority of our money back, but we would have had a few invested. So before, and actually in this case, the bank was pushing for the closing, but they hadn't shown us the appraisal report yet. So we decided to hold off on the closing until we could see that appraisal report. When we saw it, we realized that their comps weren't good. They were out of the historic district. We had a 3, 1.5. They were comping us with a 2, 1, things like that. So we pushed back. We got our realtor to give us true comps and sent them back over. They wound up redoing the appraisal. Instead of 100, the appraisal came back at 180. So that we didn't expect it actually to even be that high. We were thinking like 140 or something. So that worked out really well for us. Typically with that bank, we would do an 80% loan to value. But because the appraisal came out so high, it would have impacted our debt to income ratio, because then the mortgage payment would have went up. So in that case, we decided to lower it and take a 70% loan to value mortgage on it. So then it fell within that 1.25 DTI. So just some examples. Everything is still negotiated or negotiable, but I would say don't lose faith. When we first started calling banks here locally, it probably took about 25 banks before we really found one that we not only liked and wanted to work with, but we were comfortable with their terms. There wasn't excessive interest rates or yearly balloons or anything like that. So it took a little while. So just be patient and keep calling. When we started doing it out of state in Alabama, it actually took 45 banks. So, but now we have a bank there that we completely love and have some of the best terms, even better than the ones we have in Florida. So just keep trying. And then even once you find a bank that you like and that you're working with, you still may want to just keep your options open and find a second bank. Sometimes, things change within the bank and maybe they get slow or they get backed up. So you want to have a second option that can pick up the slack for them. That's really important. Just don't get too comfortable because it could wind up, holding you back. So I know I've talked a lot, so at this point I'm going to take a breath and see if there's any questions or anything else I can answer for you guys. Oh, the other thing is when you're first making those calls, some of the bankers, they may not be there, so they'll ask you to leave a message. I think it's better just to call back on your terms when you're somewhere where you can write it down, because I've had people call me back and I'm driving and then they're telling me their terms and I don't remember, and I can't get into my spreadsheet fast enough. So I would just wait and call when you have time and you can talk to them.
Okay, so Charlie's got a question. He says, I've had issues with small banks lending to LLCs versus me as an individual. Any suggestions on loans to LLCs?
Yeah, just ask them if they will. Ask them if they'll loan to LLCs and trusts. Most of the portfolio lenders will. They may still ask if you would personally guarantee it. That's kind of the standard now after the crash. I think unless you're doing like a big apartment complex kind of deal, they're going to look for that personal guarantee.
And he probably wants to get to the commercial loan officer.
Yeah, so you may want to, usually for the portfolio lenders, if they're willing to do cash out refis, we haven't had a problem with them doing it with LLCs. More banks have issues with trusts if you buy it in a trust, but you can still find banks out there that are willing to do it in the trust too. But just a note on the trusts, if you're using trust, you're probably using them for anonymity. So you'll want to just show the documents to your banker, but not leave a copy there, because then, you know, people could get a hold of your trust if you're truly trying to keep it anonymous.
We hadn't had any problems with LLC. Most banks have no problem with LLCs. So.
Yeah, we haven't really run into that too much.
That was the only question I got so far.
Okay. So hopefully all you guys are doing really good and not having too many issues getting refis done. It's really a good way to do the cash out refis. Is really a good way to start to grow your personal portfolio of your own properties and start building your long-term wealth.
Good question. Even when using a portfolio lender or a small local bank, what's the typical credit requirement? Okay. Even when using a portfolio, this comes from Stephen, and he says when you're using a portfolio lender or a local bank, what's the typical credit score that we're looking for? What's the requirements?
You know, I think it probably depends on the bank. So that's why at the outset on the phone call, I would just tell them about what my credit score was, and at that time it was in the low 600s. So I would just see if they're willing to work with that, knowing that, you know, there was a short sale on my record as well. Some of them weren't, many of them weren't, but some of them were. So you're really just calling to find the ones that are going to work with you, and the ones that are looking at the property and the income generation from the property as opposed to you. And the same with W-2s as well. It's probably easier to find a bank if you have a W-2, but they do still exist if you don't. So you may just have to make a few more phone calls.
So Andy Seeger asked, trust as in land trust or trust as in individual or family trust? Land trust, right?
Yeah, I was referring to land trusts. Yeah.
This comes from Donna. She's saying, when you personally guarantee the loan, does it go on your personal credit?
Not necessarily. So that's why you'll want to ask them if they report to the credit bureaus or not.
In fact, a lot of ours don't report.
Yeah, a lot of the portfolio lenders don't report to the credit bureaus. Even with the unsecured line of credits, that doesn't even go to on your credit report, and those are personally guaranteed as well. So yeah, but you can ask them that question and see.
Maybe just, you didn't touch on this, but touch on a little bit, like what we have to do. We have to give them our worth, our net worth, and have to fill out all that paperwork.
Yeah, so when you're establishing the relationship with the new bank, what they're typically going to ask you for is your income tax returns for the past 2 years. Occasionally, a bank may ask you for your profit and loss of the current year, especially like this time of year because you're like halfway through the year. They're also going to ask you for a personal financial statement. We tend to keep ours up to date on a quarterly basis anyway. We just like to know where we are. You can Google personal financial statement and get a template and just see what's involved with that. And then they'll ask for your rent rolls. So if you already have some properties, they're going to want to see your total portfolio, and they'll take that into consideration too. What we've recently learned, so today we're really talking about refinancing for, say, one property, but as you develop the relationships with the banks, they also, as you start to accumulate more properties, they're going to look at that DTI that I mentioned. They're going to look at that for your business as well as for you personally and your total relationship. So having a handle on your personal financial statement and, you know, meeting your your assets and your income coming in versus your expenses going out is really beneficial.
Okay, so Jerry's got a question for you. He says, how can you refi with no credit?
You can refi with no credit. So as I mentioned, my credit score was in the low 600s. David's was lower than that. So
I was in the 500s.
he was in the 500s. We just had to keep calling banks and be persistent, but you can find them. They do exist.
Credit partners.
Oh, that's true. Yeah, that's the other option. So we did a pretty early on in our investment career, we had the opportunity to buy an 8-plex. Certainly didn't have the cash for that. We didn't have the credit for that because it wasn't going to be a cash out refi. It was just going to be a purchase. So, but we did have some relationships with banks where we had done a couple of cash out refis. So but again, not enough to do a purchase. So what we did is we found a credit partner. And so our credit partner had a credit score of 800. 800.
Good W-2.
Yeah, and he had a W-2. And so he was just, the banker's ideal. And so we partnered with him on this 8-plex so that we could get that loan with the bank. And, and now we're doing pretty well on that 8-plex. So that's an option too.
All right, this comes from Rick. He says, have you found banks will lend to Canadian investors?
There are, yeah.
LLCs do.
Yes, there are banks that lend to Canadian investors. Again, they're probably a little bit harder to find, but I know that they definitely are down here in Florida because we have so many Canadians down here, particularly in the wintertime. So, but yeah, again, you're probably going to have to call more than 25 banks to find one, but they do exist.
And I think I've heard of Canadian investors setting up LLCs in the States, setting a U.S. LLC up and doing it that way.
That's another option. So I'm not sure how well you guys can hear David, but sometimes Canadian investors will set up a LLC in the States and start to build the credit for the LLC and then be able to work with the banks through that LLC. So, any other questions? Cool.
You might want to just share with them, just totally not kind of bit, but how powerful cash out refi is when you walk away with money, and you hear about wholesalers, but you really don't hear that get talked about much.
Oh yeah. So yeah, just to give you an example. So I mentioned that one deal where we pushed back on the appraisal, and then we got more money back, and it appraised much higher than we thought. What is so good about that deal, and what we try to, but candidly to a lesser extent do on all our deals, is we try to make sure that we get some extra cash back. So if we take that same $100,000 scenario, so the after repair value is 100,000, buy it for 60, maybe put 10 in it, so you're in at 70. If you find the bank that's going to give you the loan to value of 75 or 80, when you do your cash out refi, you're going to get, on top of the 70 you already have in, you're going to get an extra $5,000 to $10,000. That's a big deal, not only because you're getting extra money, and that's always good, but what makes it a bigger deal is that that's tax-free money. So unlike when you wholesale, if you wholesale and you make 5 or 10 grand, depending on your tax bracket, you could lose up to 50% of that money. When you do a cash out refi and you get 5 to 10 grand, it's a loan, so you're not paying taxes on it. So you get to actually keep that $5,000 or $10,000. So that's another benefit to it.
Huge benefit.
That's why we like cash out refis so much. Any other questions?
I think he just said he had an LLC set up in Utah. Thank you. Yeah, some other questions that came through that I can see.
All right, good. Well, it was really nice chatting with you guys today. I wish you all the best of luck in your cash out refis. They can be very profitable and help you to take additional steps towards increasing your worth, your net worth, and your wealth. So all the best and happy investing, and have a great night. Thanks, everyone.